This is a chart of median home prices in the United States over the last 40 years. And this is a chart of median household income over the same period. They used to move together. Now they don't. That gap? That's where home ownership went to die. So let's talk about why buying a house has become the economic equivalent of trying to date someone who's not looking for anything serious right now, but also won't let you see other people. Because here's the thing. Everyone knows housing is expensive. That's not news. Your parents know it. Your landlord definitely knows it. The guy who bought a duplex in 2011 and now owns 4 properties won't shut up about it. But expensive doesn't quite cover it anymore. The median home price in the U.S. is now around $420,000. The median household income is about $75,000. That's a ratio of 5.6 to 1. In 1984, that ratio was 2.8 to 1. In other words, houses cost twice as much relative to what people actually earn. Not twice as much in dollar terms. Twice as much proportionally. Inflation, supply shortages, interest rates, zoning laws. But here's where it gets weird. Because nobody tells you this part. In 2020, mortgage rates were under 3%. Houses were expensive, but financing was cheap. Then inflation hit. The Fed raised rates. By 2023, mortgage rates were over 7%. And you'd think, okay, higher rates mean fewer buyers, so prices should drop, right? Supply and demand. Econ 101. Except prices didn't drop. They plateaued. They dipped slightly, but they didn't collapse. And this is the part that breaks people's brains. Because if rates go up and prices don't go down, that means affordability just got worse. You're paying more per month, and the house costs the same. It's like if your gym raised membership fees, but also removed half the equipment. So what's going on? Well, first, supply. There just aren't enough houses. We've been underbuilding for over a decade. Zoning laws make it nearly impossible to build dense housing in most cities. So yeah, not enough houses. But here's the thing. Even in markets where new construction is happening, prices aren't softening. Which brings us to the second thing. Buyers aren't who you think they are anymore. In the old model, most home buyers were people. Families. Someone who wanted to live in a house. Now, a huge chunk of buyers are investors. Corporations. Private equity firms. Cash buyers who don't care about interest rates because they're not getting a mortgage. In 2023, nearly 30% of home purchases were made by investors. That's up from about 15% a decade ago. And when you're competing against someone who's buying houses the way people buy stocks, as an asset class, not a place to live, you lose. Because they can pay more. They can close faster. It's like showing up to a pickup basketball game, and the other team is the 2017 Warriors. And this gets even weirder when you zoom out. Because institutional investors aren't buying homes because they love real estate. They're buying them because housing has become one of the most reliable stores of value in the economy. So now housing isn't just shelter. It's a financial instrument, which is great if you already own a house. Your net worth goes up. You vote against new construction because it might lower your property value. But if you don't own a house, you're locked out. And the longer you wait, the harder it gets. Because here's the other thing. Wages haven't kept up. Median income has grown about 180% since 1984. Median home prices have grown over 400%. So even if you're doing everything right, good job, no debt, decent credit, you're still losing ground. And this isn't a personal finance problem. It's structural. Because when homeownership becomes unattainable for an entire generation, weird things start happening. People delay having kids. They move less for jobs. They rent longer, which means they build less wealth. Homeownership used to be the default path to building generational wealth in America. Now it's a luxury good. So what do you do? If you're waiting for prices to crash, I have bad news. They probably won't. Because the forces keeping prices high, low supply, investor demand, people who bought at 3% rates refusing to sell, aren't going anywhere. If you're waiting for rates to drop, maybe. But even if they do, lower rates just mean more buyers, which pushes prices back up. Here's the uncomfortable truth. The system isn't broken. It's working exactly as designed. Housing prices are high because people and institutions want them to be high. Because homeowners vote. Because real estate is an asset class. Because the entire financial system is built on the assumption that housing goes up forever. And maybe it does. But if it does, that means an entire generation is getting priced out of the thing their parents considered a birthright. Anyway, that's why buying a house is almost impossible now.